Most people think selling covered calls is passive income on autopilot until this happens. Your stock runs hot and your call goes deep in the money. And now suddenly you're praying for a crash just to keep your shares. So watch this before you sell another covered call or another option, because this one thing could save your portfolio. What's up, guys? It's your boy Looney. And before we get into it, I do want to do a quick shout out to my Discord. It is free to join. And then I also offer a premium membership. It's $8 a month and you get access to my trade call outs. You get one-on-one coaching. It's a community. I do giveaways and more. You can check it out. I have a selling options course. All the links to it are in the description. So here's the problem. When your covered call gets deep in the money, like mine is right now on SoFi, let's actually pull up SoFi. We could see here my position. I have 400 shares and my cost base $11.29, and overall I'm up 65%. But because I have covered calls, I'm kind of stuck. Sure, the premium looked good when I originally sold the covered call, but now I'm sort of boxed in. So if we look at these 4 covered calls, we're going to ignore the put credit spread and the other plays for now, but this covered call, I have 4 different contracts on this one, and you can see they're deep in the money. And the reason is because I rolled these, and we're going to get into that, but also the stock is trading way above it. If you see, SoFi has ran up almost 40% in just the past month, which is insane. And I usually sell monthly options. So by doing this, when you sell a delta that's pretty low, there is still a chance that the stock exceeds that strike price. And when that happens, you're going to have to manage it, whether you want to just let it expire and you get your shares called away, or we're going to go into rolling. And that's what I would suggest doing. And that's what I am going to be doing. So I have these $15 calls, and it doesn't expire until the 25th of July. So I do have about 30 days until it goes. And with cover calls, you do lose upside, and that's just the big risk with doing cover calls. Are not always guaranteed premium. But rolling isn't just about buying time. It's also about just buying control. So what I'm doing right now is I'm looking to roll these out when I get closer to expiration, when I get about 3 days till expiration. So about the 20th, I'm going to look to roll this position. And to roll it, you're going to go to trade, view all options, or actually it's right there. You're going to go to trade, roll position. And I'm not going to do this yet because there's still a lot of time left, and who knows if SoFi is going to go down or not. Now, select new position, and then I usually go out an extra 30 days. And for that one, it would probably be August 15th, but that one's not available, or it would be like August 25th, and that's not available. So let's go to September 19th, a little bit further. And I usually like to go 1 to 3 strike prices. So if we went to the $17 call, let's just see what it would say. It would cost me $216 just to open this trade. Now, the benefit of this is I could continue to roll and roll until my stock is trading below my strikes, and I could start earning that premium and actually be able to keep the stock, because I do see SoFi as a long-term position for my portfolio. And the way to get out of it is to roll it. And when you also roll it, you can collect more premium, and that's what happens. But in this scenario, it is a debit, and that's because of how deep it is in the money. And I might do this trade because it is pretty high up the stock, and I need it to get closer to its current price, or else I risk early assignment. An early assignment could happen at any moment. Someone can decide to exercise their calls, meaning they'd like to own the shares or own SoFi. And although I don't know if that's going to happen, because $15 call or owning shares at $15 for SoFi isn't that much, or it isn't that big of a difference from where it is right now. But if I did have like a $10 call or somewhere around there, there is a bigger chance of assignment. And we'll see if SoFi decides to go to 30, then we're definitely going to be in a higher chance of assignment or early assignment, which you can't really control. And that's just when someone else decides to exercise their option. And I actually have a long-term buy call you could see down here, and I could exercise my option. But I believe when I go to exercise it, it's going to say that there is a lot of extrinsic value. And that's where the option seller kind of benefits because these shares that they're possibly exercising have a lot of extrinsic value, and therefore rolling is a good alternative to not get assigned early or just avoid assignment in general. So again, roll position, select new position. I like to go out about a month, and we'll go back to that other one. And I do have another one that's $16, so a little bit better, but again, roll out, and then to that 19th, September 19th, and we're gonna go to that 17th or even 16th we can go to. I'd rather go to the 17th. If we were to go to the 16th though, I would get a net credit. I'd get paid to do this roll, which is very good, very beneficial. I don't know exactly what I'm gonna do. I'm gonna wait until we get close to expiration because who knows where SoFi is gonna go. I mean, it does look like it's running up and it's already ran up 40%. So I'm not sure if it could go up even further. But I'm very curious to see where it is. And if it does keep running, unfortunately, I'm going to get capped because if I get early assignment, I'm forced to sell my shares at whatever call I have, and therefore I'll miss out on gains, which is not great. You miss all that upside. And by rolling, I'm hoping to avoid missing all that upside and just keeping my shares. I'm hoping that it keeps climbing. Now, if we do see a crash or some kind of bad news, I'm still holding the shares I want, and then also it is in a better scenario. My covered calls start to increase, but you can see here that I'm up 2,900, but my calls or just my option in general are down 800, so it's capping my gains pretty slightly. And if I were to get early assigned, I'm not really sure the math right now off the top of my head, but I would miss out on some major gains, even though I did buy it at 11.29. But just overall, just missing out. That's what cover calls. So just remember this next time you sell a call. It's not all about the premium. Don't go insane with the deltas. Choose a safe delta and choose it at the right time, because it's all about where the stock could go and how you'll react when it does hit that. So I probably didn't time it the worst time, but I didn't time it the best. We didn't know that SoFi was going to go up 40%. That's a pretty insane move. And rolling isn't failure. It's really just a strategy. Don't forget to like this if it helped, and share if you've ever been trapped by a covered call, and follow for more smart option plays and not just hype. And don't forget to check out the Discord in the description, and then also offer a $8 a month premium membership, again in the description. Until next time, peace.